All right, so on 12.5B, even though we're on A, let's go ahead and just fill in all of our accounts. Has anybody even begun this one like I asked you to? 4B, you shouldn't be stuck on. There was a video. It's completely done. Okay, well, we can talk about that one. Let's record this one, then we'll go back to 12.4B. Sterling, you just popped up. We were just talking about that one, I think. So that's all right. Was it the principal times rate times time, or what was it? All of it?
I was talking about how my Patron last night here.
Okay, that could be part of it. Okay, thank you, Stephanie. That would have been awesome. Did you do that? Oh, well, I'll just take it. I'll take it as is. Thank you. All right, so let's go ahead. The book gives us all of our trial balances to go ahead and put in. So let's do this. 3235 is our cash beginning balance. 6910 is our accounts receivables. Then we have merchandise inventory of 16985. Supplies are 750. Prepaid insurance is 2400. Office equipment, which we don't have. So we're going to use store equipment, which is what's in the problem. And we have $6,000 of that. So this is going to be store equipment, not office equipment right here for this. I see Levon squinting a little bit. Let me zoom in. Better?
That's better, thank you.
You got it. Forever on YouTube. That's better, thank you. Do we have warehouse equipment? No, well, we have equipment. What does it say for equipment in the book? Sorry, because I don't have my book in front of me. What's the balance on equipment? Oh, that's store fixtures, right?
Yeah, they got store equipment.
Oh, and we have an accumulated depreciation already of $2,000. That's a credit. 8,300. Well, it's store equipment is 6,000, and we have $2,000 of accumulated depreciation.
So that will make 4,000.
Well, we're not going to give it 4,000 yet. I'm going to borrow this from you really quick, Domingo. I'll be right back with this. Relying on everybody telling me is throwing us off already.
Go through the formula that you created,
Yeah.
which I haven't.
So accumulated depreciation's there. Store fixtures is 1570. Oh, 15,760. Accumulated depreciation for that one is 4,100. Notes payable is 4,000 credit. Accounts payable is $600 credit. Moving on down to capital, we have 39,780. We have an $8,000 draw debit. We have sales of 236,560. We have returns and allowances of 6,000 as a debit. We have purchases as 1,600 or 160,000. Purchases, returns, allowances of 2,000. We have income summary of nothing. Rent expense, because an expense is always a debit. I knew you guys would get that by the end of this. 18,000, 2,400 for a telephone. Salaries is 40,000, and payroll expense is 3,200. It looks like that is it. No, I just screwed that one up. So I'm going to go up here and put $600 in. Did I do it right now? We'll find out, because after I type in all these numbers, I'm going to come on down here, say this equals the sum, parentheses, everything above it. Close parentheses. Whoops. All right, so I have two numbers that equal each other. That tells me that I got it right. Also, when we're going to bring something forward, we're just going to say the number above it equals the number above it. And since I have nothing going on down in this little area, I'm just going to continue that number to the bottom, and it should tell me try again because we're using the wrong thing for that one. Great.
Yeah, but the fact that they match, that doesn't necessarily mean that it's...
It doesn't mean that it's correct, but it means you're probably a lot closer to being correct than incorrect.
Yeah, that's better.
You've only made the same mistake twice at that point. That's a good thing.
I just want to make sure.
I'm glad you want to make sure. I want to make sure you make sure. All right, so let's start with our first one here. Our first one is merchandise inventory. Who wants to read A for me? Anybody got? So we started with 16,980, but merchandise inventory on hand at the end is 15,000 what? 840. I'm just going to go ahead and put that number right here. And we're going to remember Mr. Greer's Golden Arches rule, which means we're going to do what to this one, Lisa? Whoop, we're going to hop it over. So we're going to say this one's A. We're going to hop over this number. Then we're going to take this 15,840. We're going to hop that one over to the other side to make sure it's right where it needs to be. And this is going to be B. Equals 15,840. And we can't just do that to one thing. We have to come down, and what's our slush fund account that we're going to use to get rid of that? Income summary. It's just down here. So this one will be the opposite. So this will be A. And it's going to equal that. This one's going to be B. It's going to equal that because we're doing the opposites. Remember, we're going to do the opposite side so we have our double entry. Excellent. And as Domingo was saying before, I probably want to come down here, copy this formula over, copy this formula over, and that way I can know right now everything's in balance. That's good. We're not too messed up. C. During 2013, the firm had net credit sales of 160,000. Past experience has shown that 0.8%, which is Elizabeth 0.008, that's probably where you got that one from. Okay, so 0.8%, which is 0.008 of their net credit sales of 160,000 should be placed in uncollectible accounts. So we're going to come up here to our allowance for doubtful accounts. We're going to add to that equals. I'm going to do a formula in here, and I think the formula disappeared on YouTube also. I think I said that. I'm going to do and it's only because of the spreadsheet. It's because it's all locked down. It's not going to keep this one. 160,000 times 0.008, which is that percentage. 1,280. It's going to be C. And if I come back there for some reason, my formula bar shows nothing.
I noticed that as well.
I'm sorry. I told you it would happen. So if we come down here to uncollectible accounts expense, which is down below, C, and this one equals 1,280. Now we're already off here. So what I'm going to do is I'm going to come down to this one and say this equals the sum of everything above that. And this one's going to equal the same thing. And now they're equal because we're adding in everything below here. So we can see that they do equal. Sure, the equation for C is it equals, according to the problem, $160,000 net credit sales times, you could do 0.8% if that makes it easier. That would be the formula. And when I hit enter, it should give me 1,280. Good to go. Delta, or D. On December 31st, the inventory of supplies showed that items costing $245 were on hand. So we started with $750. We've only got $245. How do I get that? Well, I know it's going to be a credit because it's a debit to start with. So this minus what was left, which is my formula, what I started with minus what I had left is going to tell me what was spent during the month. $505. Make that D. And if I do it in one place, Domingo, what do I have to do?
You have to transport it to the other side.
The expense account for supplies. So I'm going to come down here and say D, and this one equals the $505. Okay. Lisa, tell me, how are we going to do the E? I'm just kidding. So echo, E. Now, we're going to start off and we're going to be like, oh, this is going to pop my brain. But as I said on YouTube, on the YouTube, when I had them come to my house and videotape me. As I said, we need to start paying attention to dates from here on out. So when was this insurance issued? July 1st. We purchased a 1-year insurance policy. So if we go up here and we see a prepaid insurance, we got a 1-year insurance policy for $2,400. What month are we in right now? We're in December. Aha, December 31st. Is it, what do you need? For D was this $750 right here minus the $245 that was left over gave us D. But for E, I'm just going to go in prepaid insurance. Lisa, let's walk through this together, you and I. If we are July 1st, how many months are left in the year when we bought the policy? Perfect. So this is an easy one because they're not making it hard on us. So how much of the policy have we used by the end of the year if it's a 1-year policy? Well, how much of the policy? Like in a percentage. How many months are in a year? It's 50%. So we've used half of the policy. So if we've used half of it and we started with $2,400, what would be the formula to figure out how much we have that we've used? Equals what? That number times, how much have we used? Well, you could do 6 divided by 12, or you could do 50%. We've used 6 months of 12. Does that make sense? Because it's prepaid insurance, but we're at December 31st. So every month that goes by, we're using 1 month of prepaid insurance, but we can see that we started with $2,400 according to the problem, and we've never taken anything off of that. So we know that we have to account for it at the end of the year. So we're going to put 6 divided by 12, so 6 months out of the 12, which gives us $1,200. Bam. I would drop the mic, but I still have to do my double entry. Okay. So we're going to go down to insurance expense. It's our second half of this. We're going to say this one equals that $1,200. So equals $1,200. I'm still even down here. Oh yeah. Still even. So $1,200, and we put it down on insurance expense. On F for Foxtrot or Fuego, because today my county's on Fuego, fire. Yes. E equals MC squared. Oh, no, that's the Einstein theory. No, E is the number, so it's going to be equals this 2,400 times 6 months out of the year. Now, I'm just going to say this really quick. Let's just say in the next class, you have to do something that was 4 months and not 6. Just make that a 4 divided by 12. It was 2 months instead of 6. That's a 2. It was 10 months instead of 6. Make that a 10. You can just change that number, and it gives you the ratio of how much of it was gone for a year. Let's say it was a 2-year policy, and you only used the first 6 months of it. You do 6 divided by 24. There you go. Okay, so you guys are getting it. So you just write that formula out a little bit differently, But we can make it very simple, and we, like I said, don't even worry about the math. You just write the formula, you hit enter, the number's there. That's what I love about Excel. Makes it so much easier. We just think, oh, I just need 6 months out of the 12. It could be a really complicated number. This book is not going to give you super complicated numbers. So that's a good hint. You shouldn't be having like a 0.5563249 percentage. That's not going to happen. But when we're doing it like this, we should be able to come up with just a pretty decent number. All right, continuing on to Infuego. All right, F, on January 2nd, 2011, we're talking about 2 years before. Actually, yeah, so 2011, 2012, we're at the end of 2013, we're at the end of the third year. Or I could do it the German 3, like that, okay? So at the end of the third year, we have purchased store equipment for $6,000. The equipment has an estimated useful life of 5 years and $1,000 salvage value. I can do this one in my head because 6,000 minus 1,000 is 5,000. Every year I'm going to depreciate 1/5 of it, which is $1,000 a year. But to make it good, I'm going to come down and show you on my cute little thing I did here. I could start off with this little spreadsheet I made that I showed you, that I said I would definitely keep this. I could say it was $6,000 purchased at a salvage value of 1,000. And every year, so this is my monthly. I'm going to just write this in here. And this is my yearly. Could have just put that. Because I had it all calculated out, this tells me my monthly, this tells me my yearly. This is, in fact, I'm going to do this. Let me just kick this one over and say years, months, total months. There we go. So we can see that we have all those things labeled here. So our amount per year, and I'm going to go ahead and put dollar signs on it just to make it really peachy keen. Oh, it's $83.33 a month. There we go. But every year, that's $1,000.
But you said that the book said that it's been 3 years already.
Well, yeah, so let's go back to the problem.
So you multiply it by
It's been, well, they've already taken off 2 of the years. So do we put a 3,000 right here?
no.
What do we put? 1,000, Elizabeth. Nailed it, because we want it to equal 3,000. We're just doing the yearly amount. So if we go back and we see how much depreciation do we get per year, it's $1,000. So I'm going to go ahead and jump back over here and say this is F is 1,000. And depreciation expense right here. F is 1,000. I'm just going to say equals the one above it, because it keeps it equal. Even doesn't let me do any kind of screw ups on my typing. Down here, we're still even. We're getting closer to that number you had, Lisa. Slowly but surely. G. For gosh, Mr. Greer is awesome. G is on January 4th, 2011. Uh-oh, I'm feeling another depreciation coming on here. On January 4th, 2011, the firm purchased store fixtures at $15,760. I'm not even going to read the rest of the problem. You know what I'm going to do? I'm going to walk over here and I'm going to go like this. I know I just purchased something for $15,760. Got my nice little formula going here. I'm not even going to read the rest of it. I'm just going to see, where does it say salvage value on here? Because I'm starting to get good at this. $1,410. I am betting that they're going to want, I'm not even going to read it, I'm betting they're going to want me to put another $2,870 into this problem because I bet they recorded the first 2 years, but they didn't record the third year. So I'm going to see if I'm right. $2,870. We putting any money on this? Let's see here. So accumulated depreciation, 2,000 G. We're going to put in there. Now, did we take everything off? Did you tell me the right thing? Oh, I see what you didn't tell me one more thing. Can't put money on it yet. How many years? 7, that was the difference. So notice because I have this little tool, all I have to go in and do is change a variable. I can just type it out and it automatically recalculates everything for me. So I have all the information. That's why this is such an awesome little thing to make and save. Just say like depreciation and interest rates. You just open it up as a separate little thing, go in there really quickly and calculate it. You could do it on the same page like you were doing, Elizabeth. But I would argue that then you're just messing up your spreadsheet. So it's kind of nice just to have it off to the side to see it, and then you can use it multiple times. It's kind of like a quick little calculator. You've just built it so it's made for speed. We could do each one of these separately every single time in a cell, but that's just madness. Like, I'm going to prove the point. We could come in here and say this equals 15,760. And I'm going to have to put a parentheses in it. Already, I know I am. Because I need to take off minus the salvage value, which is what? 14,010? Divided by 7 times 12. That's 7 years times 12 months.
Minus.
No, and then times 12, because I need it to be 1 year. Or I could have just done divided by 7. Whoops! I'm really close. Oh, my formula's gone! I didn't take off the other month. No, let's see here. What was that? Equals 15,760 minus 1,410 divided by 7. There we go. That's the number. So I could do it in here with math, but it's just easier if you can go see it and then get the number and bring it over. That's one of those I would do on a separate sheet. So G, we're going to go ahead and transfer that one down now. $2,050, and we are matching once again. All right, Lisa, do H for us. Walk me through it. Tell me where you got to. Here, I'll read it. On October 1st, so we're on what month? October 1st, we're in December. The firm issued a 6-month $4,000 note payable at 9% interest with a local bank. Now, for some reason in this book, it says when they issued a $4,000 note, that means they got one. So they've taken out a note. So they owe the money. What do I do, Lisa? Help me. Tell me where you got stuck. I didn't do it. Okay. Well, I'm going to come over to my handy dandy little principal guide over here. In fact, I'm just going to rope this little sucker around here. And I'm going to put a box around it, a thick border box, because this is a separate thing. My principal was what? 4,000. My rate is what? So 9, just for Elizabeth, percent. So I don't have to do anything crazy, 9%. And my time, what was my time? Okay.
Actually, 10 months. Because in October.
It's how much is the time of the note? It's a 6-month note.
Oh, I don't have
Okay, so we know. Watch this. 6 divided by, actually, hold on. Times 12. It's $180 a month, or excuse me, $180 overall.
How did you get that?
What'd you get?
How did you get the time again?
You what?
Time.
Oh, I just said equals 6 divided by 12. 6 months for the year.
Because you had one and something else, and I didn't find it.
Well, that could have been 1 month. 1 divided by 12. So if I do this, now this is 6 months of interest. How many months are we dealing with in the problem? Well, we're going to divide it by, I'm going to do this equals this, oops, divided by how many months? There was a total of 6. So I'm charged $30 per month of interest. What month did we take this out in? October 1st, October, November, December. How many months? 3 equals this times 3. Get 90 bucks. How come 3? Because we're taking count of it at December 31st. We took it out in October. We still have 3 months to go, but we have to put the amount of the expense in the period with which it was expensed out.
October, and then you got 2 months left.
October,
You said
November,
October was already taken care of.
December. No. That's when it was taken out. It was October 1st.
Oh, okay.
So half of it goes in there. So we are going to put for H what, Lisa?
Time.
Excuse me? $90, thank you. And that's going to be payable interest because we haven't paid it yet. It's just due in that year. But because we put it there, we come down to interest expense. And this equals the $90. And we're matching again, Domingo. I'm starting to see a trend. Hashtag awesome. Okay, I, J, and K. Let's blitz through these last three. These are pretty simple. I is for the way you. Well, it would be L. We got to do. I was thinking of a I, but I couldn't. Sorry. We're gonna have to do a duet sometime, LaVon. You and I, though. Very good. So I is salaries that are payable. There are salaries that have been earned in December, but we're not paying them yet. It says at the end of December 31st, the firm owed salaries of $1,400, but it's not payable till January. Fine. Let's just go down here and put, where's salaries payable? Salaries payable, I. How much are we going to put? 1,004, oh, no, that was wrong. 1,450. And we're going to put that into an expense for salaries expense of I equals 1,450. The last two, J and K, are probably the harder ones because we have to do the Social Security and the Medicare on that same amount. But what we can do is we can come up here to Social Security and say this equals the amount that we owe in taxes, the amount that we, or excuse me, the amount we owe in salaries, times, what does it say in the book is for Social Security? Yeah, 6.2%. So I'll just do it easy for Elizabeth. 6.2%. $89.90. We also have to do Medicare for J. Sorry, these are both J. Medicare for J, which equals the 1,450 times what percentage? 1.45%. $21.03. We're going to come down after we do that first little section for payroll tax expenses. And we are going to say this equals, this is one of those compound entries, this plus this. So we have two things on the credit side, one thing on the debit. And then finally, HIJK, we're going to do two things for K because we have two unemployment taxes, equals our amount of payroll times,
6.2%.
actually no, this one is federal unemployment,
Oh, that's 8%.
1%. Times 1%. And state is 5%.
It's different than the other problem.
Yeah, they give you different ones. So K is going to equal this plus this. $87. I'm right. We have a final balance in our adjustment column of $40,597.93. And then we're just going to bring everything across. What is the one number that's going to be weird, or one category that's going to be weird when we bring it across to the adjusted trial balance? Income summary. That'll be the one that has it in both columns. Do you think you can handle it from here? No? Yes?
No.
No. This should be the third time we're doing it. That's why I'm wondering.
I spent a lot of time last time doing it, doing the B.
Yeah, these are all B.
No, doing, yeah, I did
12.4?
Yeah, 4 and A. And this one, I didn't do it because it was already too late.
Questions about this so far?
Okay. You have anything on the first column?
Do-
Above,
Do I have anything in the first column above?
credit side?
Does that answer your question?
Yeah, that's $600 out.
So we're going to just go through and do all those transfers over here. Just bring everything across, do the adding and subtracting, and we'll get that one.